Our next guest usually speaks of the love trade for gold, but the metal has fallen to levels not seen in 5 years. It's a sharp sell-off here for the gold market. Frank Holmes joins us in this edition of Gold Game Film. Frank, thanks so much for being with us.
It's great to be here in Beaver Creek, just near Vail, Colorado, speaking at the Oxford Club Investment Group.
Now, Frank, you've often talked about gold's love trade, but where is the love trade now? The metal falling sharply here, Frank. What are you seeing here on the metals front?
Well, I think it's bouncing like these kids are behind me, up and down, up and down. And the investors have to make sure they're strapped on well to enjoy that ride. But I think that's important to recognize is that this was a $2.7 billion notional value trade that hits the market. This happened about 18 months ago. Finally, last month, the investigation by Comex showed that there was a high-frequency trade, and they spanked people by slapping them on the wrists. It just appears that you can do this in the financial markets as long as the price of commodities fall down. If they do it on the upside, then other regulators get involved. So it's very distressful for investors, but I think it's a great short-term opportunity to reposition your portfolio.
Frank, let's look at that news item that came out last week. China coming clean with their gold reserves, reporting a 50% increase over 6 years. Now, a lot of analysts I spoke to said these numbers seemed small, and many didn't believe the numbers. What's your take on it, and could it be weighing on gold?
Well, I don't know. I think there's just so much negative talk and chatter about China that it's so hard to get through. Nothing makes anyone happy about China. They had 3,000 tons of conspiracy thinking. Now it's illegitimate. All I do know is the World Gold Council has worked out years ago an important agreement, and that is there is lots of dollar cost averaging by Chinese people through the banking system, buying a gram of gold every paycheck. And that's millions of ounces. So the other factor that complement that is that there's still good, clean documentation of big bricks of gold going to Switzerland, being melted down to smaller wafers of gold, and then being shipped into China. And that is a retail buyer. So I think a lot of this gold is being bought by the rising GDP per capita in China.
All right, Frank, let's take a closer look at the US dollar. What's the best strategy for a gold investor to take right now in this rising dollar environment?
Well, I think the best part is to make sure that you maintain your allocation to gold. I've always advocated a 5% to bullion, a 5% to good quality gold stocks. I think that's what's key. I know in our gold funds, we've hedged Canadian dollar exposure for those Canadian gold stocks, and that's really been a great benefit to our overall performance. So I think investors have to take a look at that and just recognize how gold is morphing in and out with currency. So the dollar is strong, so in dollar terms, gold is weak, but it still is very strong in Canadian dollar terms.
All right, Frank, on that note, let's get to your touchdown pass this week. What's it going to be?
The touchdown pass of the week is flash PMI coming out of China. It's very important. Last week we saw money supply growing out of China for the first time in a long time. The 1 month went above the 3 months. Hopefully we start seeing the PMI, the Purchasing Manufacturers Index, turn positive, but we have to get it above the 50 level, and this will start to turn the commodity trade in a more positive note.
All right, Frank, thanks so much for your thoughts this week. We'll see you next week.
All right, happy investing all.
And thanks for watching this edition of Gold Game Film. We'll see you tomorrow.